Welcome to the special value investing webinar. Today we are going to talk about the winning strategy when markets are down. Most investors are able to leverage their stock picking and they owe their investing success to that. But more importantly, how do you stick through your investment approach or your selection through the worst of times or through the crumbling market? And that is crucial. Just choosing investments at the right time at the right price is not enough. Being able to profit from that, you need a psychological makeup. You need understanding how to go about doing that. And as markets are always like this. They go up steadily up over a period of time and they come down crumbling much faster. The old saying goes that markets go up through the staircase, come down on an elevator, and coming down on elevator is quite unnerving. How to navigate through this? With me is IV Subramaniam, the Managing Director, CEO and CIO of Quantum Advisor. I'm going to ask him a set of questions which will help you understand, because he has been a practicing one at all this over the last nearly more than 2 decades, and making sense of the market and how to gear up to navigate this market through difficult times. So welcome, Subbu, at this point for this special episode.
Thank you.
Markets have caused anxiety to even the most seasoned investors. They crumble so rapidly, 1 month or so. So how do you read the markets? Why is it happening, and how to deal with it?
Sure. My way of looking at it is the markets have not caused the anxiety. It's the other way around, where investors have become anxious and market is only reflecting that anxiety. Right? And anxiety comes in 2 ways. Either it would come as a greed or in the form of fear. So right now it appears to be more in the form of fear. Going a little deeper into the psyche of investors, you would notice that mostly the investors who have not done enough homework either on the stock or on their goals or why they are investing, they tend to become very nervous when things around them change rapidly. So I guess that's what has been happening right now. Indian markets were supported by both the foreign pools of money and domestic investors. Foreign pools of money have been a little slow, so it's largely been domestically driven SIP flows into the markets. And one of the fears I had was probably most of the money in recent months came into the market without a clear understanding as to how it works or how long you need to be in the market. So therefore any sort of negative news tends to be amplified. People get worried and they sell off. And the most recent incident was probably what was caused by the ILFS incident. So the ILFS incidents, I think, again brought back fears of the Lehman crisis, which essentially we have completed 10 years. But that liquidity crisis, I think, remains fresh in people's mind.
But can it really cause one? The scale of ILFS and the contagion effect.
See, if it is not addressed very quickly, it can cause quite a bit of damage. Because the liquidity is what drives a lot of short-term movements in the market, and if at any place that is in shortage, it tends to accentuate other things. Like people are forced to sell off other good quality papers only because they cannot sell the bad quality papers, and they may need liquidity very urgently. And that again sends a wrong signal into the market. So at this point, I'm not saying that the scale is large, it seems to be controlled, but at the same time there is a nagging fear that the story is still not completely over, and the liquidity could be that the liquidity crisis or liquidity issue could come back to bite us in different ways. So I don't read the markets, they are unpredictable as they are, but I would be worried till this issue is completely sorted out. In at least a more concrete way it is sorted out. this will continue to haunt the markets for some more time. That's what I feel.
You have been a long-term believer of value investing, the approach, and maybe it got articulated and embedded in your funds as well, domestic funds too. How does value stack up in this phase of the market?
So the advantage of value investing is it in these kind of market, when things are very volatile or when things come down very rapidly, the value stocks on a relative basis tends to hold on better. Value stocks also decline, but because there is value which is very well articulated in the investor's mind, he or she does not panic so much, and the focus is on either on the balance sheet strength or on the earning strength of the company. And at the time of buying itself, a value investor would typically have kept a good margin of safety for any such decline, and therefore he does not become nervous or worried about when stock prices decline. In fact, he could use it to his advantage by buying more of that stock. So that's one of the reasons why value investing stands out in such phases, because the expectation on future is quite low. The focus is always on what has the company done till date, how solid is the balance sheet, what is the margin of safety you have, and that allows them to sustain this period quite well. Having said that, there are times when value stocks also will decline, because sometimes they are the most liquid stocks. So if somebody is not able to sell any other stock and he or she needs quick money, or there is a redemption pressure, then you will find even value stocks being sold. That can be turned into an advantage, because the value stock has actually become cheaper if somebody is selling, and therefore you can buy. So what I want to leave the message is, while it stands out, it helps you protect, but for an initial period it can also cause anxiety, because in that,
and it's not a complete protection.
They also fall. It's not a complete protection. It will fall.
Yeah. It's not a bond anyway.
Yeah, it will fall. But if you have done your work very well on that company, then I don't think you need to be nervous.
Do you come across a situation that you chose a value stock, you had a belief in it, and the market crumbles so much, so does the stock, for a variety of reasons? Even the outlook gets a little grim, or the market, it happens to be the most liquid stock, so it has fallen so much more, or as much as the market, without showing any greater resilience. Does it really cause a change in your thinking? Do you change your mind about the value stock, that this turns out to be
no.
Just another stock?
No. So we will just go back to revisit our fundamentals. So just to recheck whether our fundamental assumption on the company, are they still the same, or has the environment changed that it has dented the fundamentals on which we bought? If there is no change, or if there is no worry on the fundamentals or the way the company has worked, then actually we would take it as a big advantage. We would pile on more and buy more of that particular stock. But always we will revisit the fundamentals to decide. We won't look at the price. We'll just go back. It has fallen. Now what? Is there still a margin of safety as the company's business?
Or a greater safety, or
it has given us greater safety because the valuations have become cheaper. Then we will go and buy even more of that stock.
So how should one ordinary investor be dealing with this? What should he do?
So an ordinary investor, as we have said in your programs and in others, needs to be clear as to why he or she is investing. What are their long-term goals? What is he trying to achieve by investing? If he has done that work, then this short-term volatility would definitely not cause so much harm. But if he has come into the market only because it's been in the current, it's a fanciful
good times
to do, or good times to do, then he will become nervous, because then he is really looking at just the near-term returns and gets worried.
Good times turning bad, so
exactly, it turns sour, and then he wants to get out. So if you have done the work, then I think he or she will remain in the market. And there I have only two caveats. If you are the type of investor who does not have the time to analyze, study balance sheet, understand the business, then you should never invest directly. You have to get
entrusted money to somebody else. Yeah.
And within mutual funds, you have a wonderful system of this SIP, which allows you to average out even if things fall. So at the end of the day, I think that's a better way to invest rather than investing directly. Use an SIP option to get into the markets.
So, same old thing.
Yeah,
Get
same
into a value investing, value fund, invest invest regularly,
Yes.
and make sure that you have the long time frame on your time on your side.
Yeah, that those fundamentals don't change, right?
Sure.
Your goals still remain broadly the same.
You have any thoughts in terms of when good times can be back again?
See, if the
These might be great time for a value fund to
if
be
the current
bought.
liquidity problem is in declining prices, then the good times are already there. Right? So last month was a good time for our strategy because certain sector corrected, the valuations became cheaper, and we were able to, we were holding high cash. If you look at the long-term equity portfolio, it had high cash, and we were able to deploy some into the markets. So for us, it's more to do with valuations, which will decide good time, as opposed to just feeling good about things are nice and stuff like that. So for us, last month was a wonderful time because
You could do bargain hunting.
Yeah, we went bargain hunting and reduce to some extent the cash levels in the portfolio.
The message is very clear. The winning strategy is to do the same boring stuff. And
it is, I have to tell you, Dhiren, it is not boring. It is very exciting actually when these things happen. So it's more of doing regular stuff as opposed to doing boring stuff.
Sure. No, boring in the sense that, there isn't much excitement in terms of doing something extraordinary. Get up in the morning, do your SIP, go to work, save your job, doing all the basic stuff. So thank you very much for being here and, sharing your insights on the winning strategy when markets are down.
Thank you very much. Thank you.